Thank you very much for the warm welcome, Nhum, and well done, Maro, Nhum, and team for laying on such a fantastic event. I think you'll all agree it's great to have everyone back together. So the next panel is to discuss the hot topic, not just in Vietnam, but globally, of branded residences. And then we'll go on to speak a bit about hotel investment as we start to see the recovery in Vietnam. Branded residences globally have seen 230% growth over the last decade. And you heard Maro comment on the growth we're going to see over the next few years in Vietnam, around 127 projects growing to 261 projects with brands in the next few years. We've also seen the number of brands double over that same decade. And we've seen branded residences across the globe achieving approximately 30% premiums over standard condominium projects. So there's clearly a motivation for developers to go down this route. We'll touch upon some of the trends also around increased amenities for such projects and the increasing emphasis on wellness post-pandemic. There's obviously been a lull in investment transactions due to the pandemic, but huge anticipation for what the next few years might bring as we see the recovery and we continue to see the growth in domestic tourism as well. So I'll ask each of our panelists to quickly introduce themselves. We've got a fantastic panel here for you today with a very broad range of experience. So Peter, would you like to just provide a quick introduction and then we'll go across the panel.
I guess before I begin, is this social safe distance?
I think we're okay there. We're in a healthy environment.
Okay. My name is Peter Meyer. I am Chief Executive Officer of Lodges Holdings. We are a full-service integrated hotel development, investment, and operating business, and with a strong focus on Vietnam, but with interest in Cambodia and aspirations to expand the business regionally. We have the Fusion brand that I think folks would know about. And we have a management business as well that includes Glow in Thailand.
Hi, everyone. Nice to see you. I'm Carolina. I'm the Senior Director for Radisson Hotel Group and Managing Director of this country. For much pleasure that I'm saying that we opened the business unit here, based here. And I truly believe, and we as a company truly believe in this country. We have 1,700 hotels across the globe with 8 distinctive brands. So far, you know only 2, Radisson Blu and Radisson. We opened last week 2 more in this country, and we look forward actually to bring the other 5 brands into Vietnam. Thank you.
Hi, everyone. My name is Chow Ta. I'm the Executive Director, Legal Transactions for SC Capital. SC Capital is a private equity fund investing pan-Asia, including Vietnam, in everything real estate, including hospitality. Very pleased to be here.
Hi everyone, my name is Nguyễn Gia Long. I'm a special counsel at Baker McKenzie. Baker McKenzie is an international law firm. We are a full-service law firm. We do literally everything regarding to law. In Vietnam, we have been here for 30 years. In the practice, my daily practice is real estate, and major part of it is hospitalities, including M&A of the hotels, hotel managements. So glad to be here, good to see a full house, and excited that to share with you all what we know and what I have to say. Thank you.
My name is Gibran Bukhari. I'm representing Masterise Homes. Masterise Homes is responsible for bringing world-class excellence to the Vietnamese market. We are the largest branded residence developer in Southeast Asia. Thank you to be here.
Great, thank you very much for the introductions. Maybe we can go in reverse order. Yeah, round of applause for everyone. Thank you. We'll maybe work our way back again. So with the branded residences topic, do we see branded residences as the new norm in Vietnam? And what do we see as the pros and cons of branded residences versus other forms of housing?
I think being in the industry for a little bit, you sense the pulse when you enter into a country, and especially when you enter into a city. And it's undeniable, the pulse that's here in Vietnam. I mean, when you look at luxury and you look at luxury real estate, it's fueling the interest of all of our clients. Customers have become so demanding in their needs and wants that it's a natural progression for anybody to be interested in this level of product because the element of service that's provided for each and every residence. We travel, we go on vacation. One has to really look at the clean line between urban branded residences and resort branded residences, and there is a very, very solid line in between the two of them. Each one of them have their own rights, feeling, and experiences. But the urban branded residents are catered and tailor-made for a clientele who has high demands on their everyday lifestyle. And in Vietnam, I think this is a big void for many, many people residing here in or a lot of the major cities here in Vietnam, is the level of service that is provided in their normal residences.
Thank you. Long?
I do agree. You know, if you look at the branded residence, there's a clear difference. You know, if you're using the project on the land, which has a land title being the residential land, it's totally different that you're using the project on the land, which is the under title of that land is commercial and service land. So legally is a two kind of way for you to look at, right? Residential land is governed under the housing law as well as the land law. Meanwhile, for the, you know, this is normally a city urban residential project. Meanwhile, you're looking for the resort destination where mostly is a commercial and service land, 50 years ownership, and then the development and segment is different as well. So I would say branded resident is more than a lifestyle, but it also can give you, in Vietnam especially, give you some gain in terms of value, but mostly is an experience.
I'll wear the investor's hat. I think in terms of the demographics of Vietnam today, you have a lot of young people traveling the world. And so for them, branded residence actually lifts the quality of life, the experience. So I do think branded residence is here to stay. Whether what brand, what's suitable for the segments or, you know, the demographics in Vietnam would be for the operators to start finding out.
It's a great point. It's not all about super luxury. We can have branded residences at all segmentations. So we've got Gibran representing the luxury end, but there's plenty of other options out there as well. Carolina?
Yes, I agree. So we can start as an upscale product because at the end of the day, we need to, you know, justify the fees. So I will not go lower than that. But it's true. We are not selling a room anymore. We are selling a lifestyle. So it doesn't exist, that concept anymore. And I agree that Vietnamese right now, after they went around, look at the world, now they want the same service that they are used to have when they are traveling abroad, and they are bringing it into their own country. And this one is through operators, international operator. What is, for me, it's a win-win situation. As usual, the brand get recognition, and you know, the project developer, or whatever you want to call it, get their premium. So it's a win-win situation here, and we need to be very careful about the premium. Premium depends if we are talking about an upscale. You mentioned 30%. Please don't expect 30%. Oh no, please don't get this in mind. Depends on, please be careful, depends on the location, on the quality of your product, of the quantity of your product. It also depends on what is going to be the facilities and how we can attract our, guests or residents or whatever we want to call it. So this is very, very important. So the premium doesn't go because you put a brand on top, then the premium is absolutely, without, oh, I just got a premium. Doesn't work like that. It works if there is a complete due diligence done, and if the operator is involved on day one, if there is a project team, and then the project team involve the developer, involve the operator, involve legal, involve technical, involve design, involve so many aspects. So, and that's the right way to go for me.
So the question is, are branded residences here to stay? The short answer is yes. Vietnam is no different than anywhere else, and people get a psychic gratification by identifying with the brand. So brands are very much here to stay, and one can just look at the streets of any major urban center, or even in the rural areas, to see how much people identify with brands, whether they are a residence or a handbag or a tie or anything else. So they are very much here to stay.
Thank you, everyone. So it's good to know that branded residences are going to be a core part of the market going forward. Maybe we can touch on how much growth we can see. And Gibran's worked in some of the highest growth markets in the world, in the Middle East, has experience from those markets. Perhaps he can share some of that experience and how he thinks Vietnam will fare trying to replicate some of that growth.
It's a great question, Neil. Many moons ago, I arrived in Dubai when Dubai was like an open box. It was an empty box. It was a place that was just flat and it was full of sand. And it was around 2005. And the market had just changed to allow foreign investors to invest into Dubai. Not the UAE, but invest into Dubai. And Dubai was named the city of cranes. And everywhere you went, you saw cranes turning and developments happening. And arriving in Vietnam, it's the exact same sentiment, just a lot faster. I mean, if I look at the speed and the demand for the highest level of standard of living, I think this far, far surpasses Dubai when Dubai was kicking off. And I do feel that each and every client or each and every person that's looking at Vietnam sees Vietnam's future and sees the potential of the Vietnamese economy. And that being said, I think Mauro's slide really ticked off a lot of the boxes when it comes to zoning down to Vietnam as a location. I mean, you have everything that you could imagine. Dubai had to create everything. Vietnam has everything. Vietnam just needs to enhance everything, showcase everything, and repackage it so that it's acceptable to people who have gained a certain standard of living. And I think that this is one of the fastest paced markets I've been in, with the highest demand and a clientele that is very, very knowledgeable. People are worldly, they travel, they experience, especially when it comes to younger people. They've become accustomed to these brands, or brands have fueled their life and their ambitions from the time they're 2 and 3 years old. There's kids today with Gucci shoes on, and parents buy Gucci shoes for their kids, and they know their feet grow in 3 months, but they still do it. This is what's fueling everybody's ambition and desires. So reaching that level of success in life where you can afford to acquire assets that are branded, which hold their value, and you can make one of them your secondary home or your primary home, it's just a natural progression for a market just as fast-paced as Vietnam.
So you've heard the bullish sentiment on the demand there. Hopefully those questions regarding oversupply will remain distant with the strength of that demand.
16 years later, Neil, Dubai every year is plagued with the word oversupply. And every year, projects are sold out because population grows, right? That place that was yesterday a place where nobody could live because it was too expensive or there were no options has become open to the world. And the world has demands to live a lifestyle in places where makes them feel comfortable, where they can work, live, and play. It's a perfect balance.
Fantastic. Well, Dubai's been very reliant on the international brands, and we heard some talk around domestic brands here in Vietnam. And I'd like to ask some of the panelists, Peter, you've had experience developing brands and rolling out brands here in Vietnam. And then Carolina, maybe give the other side of the story. So advice for developers maybe considering developing their own brands from Peter, and then Carolina, why you would maybe push them in the direction of the international brand.
Well, within our business, we have both international brands through third-party operators, be that Raffles in Cambodia or Sofitel Legend Metropole in Hanoi. I was fortunate enough, I appreciate the kudos for developing the brand, but I was fortunate enough when our business came together some 5.5 years ago, myself and the team inherited a brand called Fusion. Fusion is a organic, homegrown brand here in Vietnam. It feels like we've gotten pretty good traction and people know it. We're a lifestyle brand for relative to our resort properties and have a distinctive design. And it's been a good thing because particularly if you're looking at moving real estate through branded residences, the association, as we're talking about with Fusion, people get a psychic gratification, and there's a, beyond the facilities and services and software and everything else of identifying it, which I think is a pervading theme that's coming up in this panel.
Great, thank you, Peter. Carolina, why the mainstream operators, the international brands?
Actually, it's easier. You are tapping into, I'm giving you the key to a car. So we've done everything for you. So that's what you are looking for. Otherwise, you have to go and talk to PMS and say, okay, oh my God, now I need to build my PMS system. Oh my God, I need to have and tap into my sales. Oh, I need to go and do the design. Or I need to do this and that. So for us, it's one stop. You come to us, we're going to take care of you. We're going to sign from the first step, and we're going to bring you to the opening. So what else is the best? To have one stop, one solution, one tienda. Okay. So, and I'm not saying in the future for sure we will have more competitors, but I want to ask you here, if you're traveling tomorrow, are you going to be an international brand? Are you going to choose an international brand? Traveling right now on Agoda, Booking, whatever you want to use, Radisson.com or whatsoever, you're going to use an international hotel or you're going to use something that you don't know. What you're going to choose? That's a question to you. For me, I will choose an international brand. I will choose security. I will choose, I know, from A to Z, I arrive, the room, clearly we are going to local, clearly needs to be localized, the product, needs to be bespoke. But at the end of the day, I have the same service in Ho Chi Minh City or in Sydney or in Rome. And that's also what you are going to buy. And that's why you are buying at a premium.
So we're starting to address some of the challenges. So that was the first choice you've got to make. So after the excitement of the sales period, once Savills have sold out all your branded residences for you, what about the ongoing management? Is it simple? What sort of challenges can we expect? Carolina, do you want to continue?
If it's framed correctly since the beginning, and this is where I stretch the point to have your project team in place since day one. If we really carefully look at everything Paul and Tuan can say legally wise or SPA, or I don't want to bother you or boring you with all this, but it's fundamental, I think. What I always say to my clients is that we are going to be married for 15 years. We are not going to go on a date one night and the day after we are not there anymore, right? And especially now that we are opening the business unit, we are here on the development, we are here in the technical service, we are here at the opening. So I will be there for you, right? So what I'm saying is, it's a long path. Let's do it right, and then we try to minimize the risk, we compromise. At the end of the day, marriage is compromising, right? So again, win-win situation, I think is the best. I don't want to go on the bad side or the good side. I think compromising, when you do a negotiation, what it is compromise. There is nothing actually that is perfect in this life. No one sign a contract as I send it ever in my life. They always come back. It's always to find the middle point between an owner, the developer, and an operator. It's always there, is how we can collaborate together, how we can make this project work, how can we make this project successful. There is no one way.
Thank you. Gibran, do you want to touch on this topic?
I mean, there's a lot that we can say. I'll tell you that in my experience, I think that today we've got to fill voids. We've got to fill a lot of voids that we have in the market, and customers have big wants, big needs, big desires. And if we are not able to bring together and narrow the gap between many different places in the world, then we have not utilized where we are today with technology. We've bridged the gap where we can travel anywhere in the world. People are traveling all over. Why should I be able to live a certain level of standard in New York that I can't live in Vietnam? Why is it so important that bringing in a big brand that is well known when you're making an investment, gives you a sense of reassurance? I mean, most major brands end up acquiring the smaller brands once they become successful. So if we find these new niche brands that get developed, it's a natural progression that maybe a bigger chain would come and take over that once they become very successful. However, from my experience, I see clients tend to sign, as you've mentioned, with companies that they know, especially when you're engaging in a long-term contract like a marriage. It gives that sense of security because I know that they've gone through that trial and error. I know they have the mileage. They've experienced the ups and downs of a market, and they know how to provide services to the end user. I think sometimes I'm a fan of both of them. I get experience and feelings from major brands and new brands, and I enjoy them both equally. I just find that the attraction goes towards longevity and a historical trial and error, in my opinion.
Thank you, Gibran. Peter?
So the question is it a difficult management proposition? And again, the answer would be yes. You've got multiple owners that you need to manage, and from our experience, having these, it can be a challenge, whether it's CapEx requirements, whether in the case of guaranteed yields, meeting investment parameters and everything else. Sure, so it's much more difficult having a situation with a number of owners than it would be a simple owner-manager proposition.
I think a lot of the international brands obviously bring years of experience in the full operating structure, but also it's important to have local knowledge on the ground, and we've talked a lot about the complications of operating in Vietnam, and having that local knowledge is key. And something Savills are looking at is working with brands on a white labeling basis, so working with their brands, and maybe Savills offering our property management expertise, our years of experience here on the ground from a property management perspective as a potential solution as well. Coastal destinations. Is it a good investment for buyers, buying a branded residence in a coastal destination? And leading on from that, is a rental pool contract something buyers can rely on? Long, do you want to comment on that?
I think in overall, it's a good investment. Right? If you look at the lifestyle, all the high standard that you can enjoy at your property, especially the property is well managed, well maintained, and then it gives you a little bit of the rental yield, right, rental income when you lease it out. And overall that, as you know, in Vietnam, the land value is rocketly high over time. So it probably give you a gain when you're considering reselling it. So there's a lot of upsides when you think about, whether it's a good investment. And secondly, you asked about the rental contract, right? Rental contract is, what you heard. It's about when you buy it and you plan to lease it back or put it into the rental program for the operators to manage as a hotel inventories of your unit. So looking at that is always, in two sides, right? From the developer point of view, you consider whether or not you have a good drafting of your contract, whether or not your draft contract is consistent with what you agree with the international operators in terms of FF&B reserve, in terms of management fees, and how to balance with, between the base fee and incentive compared to those management fee that you were collecting from the owners. And there's a lot to deal with as well, when you look at the rental contract, like complimentary stays, how many days, whether or not it's mandatory rental pool, what happened with the non-rental units, right? How to contribute into the common areas for the maintenance and upgradings. A lot to consider. And then if you have a good consultant, of course you have a good drafting. Then on the other side, if you are assuming the buyer, what you look at in terms of the rental pool contract, what is a critical point or provision in the contract that you should look into to protect yourself, right? Is of course normally from buyer point of view would be a limited information that you can get of, but always there's a internal rules to be attached with the rental pool contract. You see, what is internal rules look like, whether or not the project has a homeowner association, which is giving you a certain kind of voting right as a homeowner, whether or not the P&L looks okay to you in terms of percentage and numbers, right? What is your end rental incomes after the net income look like, and whether or not there's a certain performance test, that the owner is giving you, because for mixed-use project, including hotels and branded residence, there's a certain kind of like relationship, kind of commitment between the operator and owner that you may not know. So there's a lot of things, if you're thinking about it, but the key is always carefully review the contract, the SPA, internal rules, the rental pool contract, make sure your right is well protected, and doesn't hurt to have a consultant to have you looking at that.
Use a lawyer and it's a great investment, seems to be the message.
Can I add
Peter, yeah, please, Joe.
Actually, I think there's always a misunderstanding. So I think to the end buyers, do we understand what is the value proposition we're getting? And so I think in a lot of contracts, we get buried into the words without understanding, and then all of a sudden, I can't use this residence during the time that I'm on holiday because it's in that pool, but I thought I had a reservation of how many days can I use a year. So I think that explanation needs to be explained to your buyers, because I think that's where the misunderstanding with the end buyers, and hence branded residents in Vietnam at the moment. I know it's here to stay and I believe in it, but I think there needs to be education in terms of what are the benefits.
Of course, a good sales agent should be getting that message across clearly. Yeah.
Yes.
Peter, you've had a huge amount of success in coastal destinations. Any comments on the success of those investments from your buyers' perspectives?
In simple terms, people like to be on the seaside. So assuming the polar caps don't melt and deluge the coastal lines, it's a long-term good bet to be there. That's simply put, mountains and sea and the seaside. Relative to the second question, which was around the guaranteed yields and so forth and so on. My simple response there would be that as long as things are going well, there's no problem. But if things don't go well, then that's obvious. You know, it's a pretty obvious one. But then that's where you really would run into to issues. And a lot of developers are basically using the emolument of guaranteed yields as a way to finance the real estate. And I'm not saying it's a house of cards, but if things start to fall apart, then some of these developers may not have the balance sheets to sustain those income guarantees.
Carolina, you wanted to jump in?
No, I want to pick up on your point and saying that normally owners' benefit, right, is one of the things that attract unit buyers because they are, for an international operator, they are not only allowed to go to, example, Radisson Blu, and I don't know, now we don't have one, Munich, but they are allowed to go also Radisson Blu in Frankfurt or Radisson Blu, so they are part of membership. So this is what also the developer, I think, use in order to sell. So, and that's why I repeat myself one more time. We need to work together, because if you promise 15 days, 30 days, and then you come to me and you put me a PTC clause saying that you need to perform 90% above GOP and RevPAR, et cetera, then I'm going to push back on your 30 days. Because we cannot perform. So if I have 200 owners coming, enjoy their residencies, but then I have also my obligation into the developer, then this collides. So I think all the parties need to be, you know, together. And that's one, again, I think everyone here, you have everyone on stage, and I think each of us needs to be in the same room, in the same day, to make, you know, a successful, I'm not only say branded residence, but a successful hotel, a successful, you know, asset for every single stakeholder here.
Thank you. So after what we've been through the last couple of years, I think we're all looking for how the hospitality market can be sustainable going forward, and what the authorities can maybe be offering to help with that. Maybe, Chow, do you want to comment? Long, okay, Long, you've been given the elbow. Long,
Neil,
do you want to kick that off?
Just to stay on, 5 minutes left. If you want any questions, anything, we got
Any questions, please prepare them. We'll let Long comment and then open up to the floor. Sustainability, what the authorities could be offering.
You know, we've been talking to our clients every day about the ESR kind of programs from the client side. If you are a client, you know, who have funds, right, you're looking for sustainability investments, and also, you know, it's like last few weeks I was attending a JLL's event, which, you know, main part of it was about how the developer get the H or the LEED certificates. It's a little bit of more investment for you at the very, very beginning, but you know, you get it paid back very soon. So what should we say in terms of the hospitalities and leisure resort developments? You know, you are now, I mean, looking at, since we have more and more clients asking us about, you know, their business plan to be investing into the kind of the spiritual resort or the wellness, health, you know, focus kind of destinations. We have a yoga center, you know, retreats and all that. So especially after this COVID, those things are getting more popular. And of course, the project needs to have all the kind of, you know, tree sustainability, you got like no plastic straws and all that. So we see that is a trend. And I know that, you know, even IMF is sponsoring and giving loans to your project if you want to do sustainability. So there's a huge, I mean, support from the government as well. Ministry of Construction is totally full hand supporting that. and they encourage you to invest into that kind of project with the H or LEED certificates.
Thank you, Long. Any questions from the floor? Yep. Ken.
Hi, good afternoon, everybody. For those of you that don't know me, Ken Atkinson. I've got a couple of observations first and then a question. I mean, I don't disagree with really very much that's been said. I agree with most of it. But I think we have to remember that, you know, Vietnam's not Dubai. We're not a center for aviation. We don't have flights coming in en route to anywhere other than Vietnam at the moment. And we don't have the same freedom of, and I might be shooting myself in the foot here, but freedom of entry that I think Dubai has. So, you know, nobody's raised the issue in terms of the growth of the hotel sector or the branded residence sector of foreign buyers and foreign visitors, and the problems still with visas. And you know, we need to be pushing the government to expand visa exemptions as a first thing. There's lots of issues, as we've heard, with land leases. And then when we come on to the management, and Caroline, I think you know I've been married 4 times, so longevity of relationships is not a strong point. But nevertheless, I mean, the challenges I see there are particularly with, I think, yes, they're going to help sell the properties, and that's great. And it's great to have the names, I think, if you're an investor. But I think local buyers, local investors, the challenge I see is in kind of management fees when we get down to the nitty-gritty. And I've been on the other side of a few discussions on this over the last couple of years. Buyers, owners are incredibly sensitive to any increase in management fees, even after 5, 6, 7 years, right? And obviously there's going to be a premium for branded residences. And the question I was going to ask was actually for Neil. You know, how do you see branded residences as opposed to a Savills managed property? But you half answered that saying you're going to go white label, so you're playing in both camps, right? But I mean, what's really the difference? I mean, I can see the differences, but how do you see the differences?
Well, I mean, I think there's all kinds of different models, and that's really what we've lined up on the panel today. We've got the locally developed brands, we've got the foreign brands, we heard the hybrid models referred to earlier. I've mentioned the white label, and no one model is absolutely right for the entire market. And it's really about identifying who your target market is for your particular project. And I think that's what all developers should set out to achieve. I think, Ken, your points are regarding the sustainability of the market, the opening up, and how the market should be structured going forward, absolutely key. And that was really what I was getting at with the sustainability going forward. Quick question to all the panelists to wrap up.
Do you mind? Just 1 second. I just want to address the comment. Dubai went through teething curves as well. Visa issues were an issue when we first started in getting into Dubai. Entry into Dubai was a teething process. It was not easy. But lo and behold, things progress as technology progresses. And I think at a standpoint today, Vietnam is a lot more easier than Dubai was when I first moved to Dubai. And that being said, Vietnam is not an aviation hub like Dubai, but it is a manufacturing hub. And it's a manufacturing hub that has taken over global supply for many key industries. That being said, we noticed that during the lockdown of last year when the world stopped getting their product. You know, the factories closed down. It wasn't only a month before Puma, Nike, Adidas said 45% of their global market share of supply was affected. You know, 34% of American furniture is produced in Vietnam, surpassing China by 33%. So when we look at this, we're now talking about Vietnam being an international business hub. And that being said, I think we are at the point of where Dubai was when it started. I think technology has granted us the accessibility to allow Vietnam to progress faster, because we didn't have the technology back then. But it's taken Dubai 16 years to get where it is today. It's not that you can compare just immediately here. Here's Dubai and here's Vietnam. It's a work in progress.
I'll let you take that further with Ken later. But appreciate the optimism. Fantastic. Great to see. Quick question to wrap up. Would you buy a branded residence, coastal or urban? Peter.
Coastal.
Carolina?
City.
Coastal, I think.
Where, Chow? Where in Vietnam?
Not Da Nang.
Not Da Nang. Okay.
Coastal. But also up in the mountain, I also like that too.
City all the way.
I didn't expect anything else,
all the way.
Gibran.
I work a lot. I stay in the city all day. So I want those services morning, noon, and night.
Great. Well, thank you very much to all the panelists. Round of applause. We didn't really get onto the investment subject. If you'd like to hit any of us up later in the day, please do so. Thank you very much.
Thank you everybody.